Andrew Whitelaw from Thomas Elder Markets. Great to have you with us again on Flow.
Thanks, Rikki. Thanks for having me along.
Now, before we talk about the grains and canola front, we've talked regularly about fertiliser. I saw a statement yesterday from Grain Growers Limited, Brett Hosking, talking about Russia putting some crimps on how much fertiliser they were sending out.
Yeah, so it's another, I guess, nail in the coffin of fertiliser. Russia has basically, what they've said is, we're going to put a quota on how much fertiliser we export. The reason they're doing that is they want to basically say, we want to keep domestic prices of fertiliser lower and reduce the amount of fertiliser that's leaving the country to ensure that the supplies for their farmers. And look, Russia's a major exporter, but luckily the quota is not quite, it's not quite as bad as, like, say, the ban we had with Chinese fertiliser. What it does, though, is it just means is that a little bit less fertiliser on the global marketplace. So, again, it's just another concern, and it really points towards an environment where, there's less and less places you can potentially buy fertiliser from, and it points towards, well, prices are liable to remain high for some time.
Yeah, those sort of quotas don't tend to work terribly well either, I remember from memory. I think we might have talked with Matt Dalgleish from Thomas Elder Markets about Argentina restricting their beef exports to contain local prices. It doesn't always work for them on the domestic front either.
No, well, government intervention in markets never tends to end particularly well in the long run. And it tends to be a case of, the market should be allowed to operate itself. And what happens when governments get involved is that there's unintended consequences. There's some winners and some losers, but in the end, it tends to be everybody ends up losing.
Yeah.
And so government should stay well clear in our view, and that's probably the view of every economy in the world.
Well, it might be a hangover from the Soviet era, but here in Australia, at least, the government stays well and truly, or largely, out of the market. How have things moved for us on the wheat front this week?
Look, things are looking pretty good. Prices, like flat price, the overall price that farmers receive is still very strong. It's very good. We still have, like if we look at wheat, we still have quite a hefty discount to the rest of the world in terms of, like, say, our Chicago futures that we benchmark off of. We're still seeing a fairly hefty discount, but look, at the end of the day, it's still a pretty strong price. In the last couple of days, we have seen, pretty good prices in terms of, our actual price in Adelaide. For wheat, we were up to, I think, 375 yesterday, Adelaide, and our canola as well. Canola is showing the same sort of, upward trajectory, which we've been expecting for some time. In that, like we say, we've got to compare our relative advantage to the rest of the world, and our canola has been heavily, really heavily discounted to the rest of the world. And now we're starting to play catch-up, and we're starting to see that the reality is that, buyers are going to have to buy from Australia if they want to sort of fill the French, German, European trade for biodiesel. So we've seen some pretty strong upward rises in the last couple of days.
Is that been also possibly because, if I've read the information correctly, the weather's played a bit of havoc with the canola crop, and maybe supply will be a bit tighter than people thought?
Look, supply is going to be impacted, but if we look at it on a national level, it's still going to be a fairly hefty crop. It's still going to be a strong crop compared to normal. But what we're seeing in the past was that we're seeing our canola at massive discounts. We're normally at a premium to Canadian canola. However, they've had a terrible crop, so their local values have gone up, but ours have basically drifted away from their pricing. What we're seeing now is a bit of value coming back to the local producer here. Look, regardless, the price is still fantastic. We're talking, yesterday in Port Adelaide canola, we're talking $9.70.
Oh, amazing!
So we haven't, but we barely ever see above 700. So we're a cat's whisker away from 1,000. Yep. And, that's good.
And what about on the barley front? Things have been a bit more depressed, I thought, on that front, just because of a big push into canola this year in the plantings.
Look, the barley price, again, is still, is still good if we look at it just from the price that the farmer receives, what we call the flat price. But when we look at it compared to, say, the price that farmers in the rest of the world are receiving pretty low. We're quite heavily discounted. And again, that is because of the government intervention within China. And again, like I said before to you, Rikki, government intervention tends to work badly for everyone. We are receiving a lower barley price because China has effectively banned our exports to them. But the Chinese consumer who buys barley, whether it's for malt or animal feed, is also paying a lot more. So everyone's a loser. But the barley price, is still attractive historically. It's just that we're heavily discounted, and that's a real big risk for the coming years if we find that we have, a period where demand might drop off. Then that barley one is going to be one most impacted if we don't have China.
Now, coming back finally to that advice back on fertiliser from Brett Hosking to the grain growers, that they might want to stitch up their supply, or certainly be talking to their suppliers about making sure they've got a good opportunity to get it when they need it for next year's season. That's something you'd agree with?
Well, I'm a pig farmer, so I've got my own fertiliser getting produced every week.
Yep.
But the reality is that what we've got to be thinking about is we've got to have a really good think this year about what we do. We have this, we're going to be buying our fertiliser in, let's say, January through to March. It's going to be expensive, but we're not going to, for the most part, we're not going to be selling our grain until November or December. So what we've got to be thinking about is, the timing of that. Do we have to sell a bit? Grain prices, like we say, are pretty high overseas. Do we want to be selling some futures at the same time as we buy our fertiliser, so we're not too disconnected between the two? But conversely, the reality is that we've still got the rest of the world to harvest between, our seeding and our harvest. And in the past, we have seen periods when the fertiliser price has been expensive at the start of the year, but by the end of the year, the grain prices dropped. And so that's a real big concern, is this timing. And so I think farmers have just got to look at it and say, well, what do we do? Speak to their agronomists. Do we use, variable applications? Do we grow more pulses? Do we put more pasture in and put some sheep on it? We just got to look at all the different options that we have as farmers to minimise our costs, because costs are going to be high this year. And we're not talking about just fertiliser either.
Chemicals as well, by the sound of it.
Glyphosate is at record levels. Diesel prices, almost the highest it's been in 18 odd years.
Yep.
Even fencing. If you want to put a new fence up, you want to get wood for that. That's going to cost you a fortune.
Yeah.
You want to put a new shearing shed in, it's going to cost you a fortune.
Yep.
So what we've just got to do is, and I'm a sort of as a Scotsman, we are notoriously tight on money.
Oh, I'm glad you mentioned that.
You've got to. Watch the pennies and the pounds will follow.
Yeah, that's right.
And that's what we've got to do. We've got to watch these inputs and just manage them effectively, and hope that the grain price maintains high levels throughout the year. Hope there's disaster somewhere else in the rest of the world. But we've got to be prepared for the fact that what happens if the Northern Hemisphere does have a crop next year. And nobody knows what the crop is going to do 6 months from now. Nobody at all.
Well, Andrew, if anyone wants to chat with you or find out more what Thomas Elder Markets has to say about the markets, more of that detailed analysis, where can they get that information?
I can always get it from thomaseldermarkets.com.au. There's always free to access reports on there.
Great. Thanks very much, Andrew. Good to have you with us again on Flow.
No worries. Thanks very much, Rikki.